everybody, it's Pat and Kevin, and we're absolutely delighted to have Dale Pinkert back on our show today. Dale, it's great to see you again. How you been keeping?
I'm excited because I think we're finally in agreement with something that you guys have been talking about for a long time. There have been a lot of false starts, and there have been a lot of great trades on both sides of the precious metals over the last few years. But I think that with what's happening now, that we could be ready for probably the most explosive part of a precious metal move into October year end that we've seen in quite a while. Also think the miners are going to, they're so cheap right now that, you know, I'm accumulating miners, but there are many things lining up that I was waiting for to happen, and they're on our screen right now, and glad to share it with you and your followers and the people you teach, and always admire your work. You know, when I see a tweet from you, Kevin, I put a comment up, fade Kevin at your own peril. Okay, so you guys know I respect what you do.
Thanks for that.
Well, it's mutual, Del. I remember, like, yeah, we hooked up a while back there. You had me on your show there, and always been super appreciative of that. So we're very happy to host you, and we're gonna let you do what we do for you on your show. You're gonna show us the case that you think that's building out that could give value to people who are interested in precious metals or anything that's micro. So without any further ado, share us your screen and shock and awe us.
Okay, let's get this going here.
And guys, while Dale's doing that, you could go follow him on. It's the Forex Stop Hunter, guys, on Twitter. Forex Stop Hunter. So go give Dale a follow right now while he sets up his screen.
And forexanalytics.com is the website, I think, if my memory.
Yes, as well as tradegatehub.com. So I host the FACE webinar now. I think it's been 5 years now.
Wow.
Every morning, where we bat the ball around, and then bring in guys like you, because we want our community to be as aware and edified as possible. And now I'm head of trader development at tradegatehub.com, and using the word that people call me a lot, coach, to share what I've learned over the years and help people avoid some of the landmines I've stepped on in my career.
Yeah, plenty of landmines, that's for sure.
Yeah, and you know, I also want to say that you exemplify a very important aspect of being a good trader. You guys work so hard, okay? And you know, you can't be lazy and do this. If you find a great money manager and you sign a power of attorney, yes, but if you want to be a trader on your own or discretionary trader, it takes hours of screen time and research all the time to keep your edge. And I've found that the hardest working guys are the best traders. So I can tell by your work how much energy you put into it. So let's start with silver, huh? It's the color of my hair.
And mine's good as well, Dale.
You will be by the time, by 2023, after what we're going to go through.
Yeah.
The whole planet will be great.
Yeah, tell us about it. Tell us about
All right. So, you know, last time I wasn't looking for this rally. I was looking for these stops to be taken out. So we had this whole nice run that you guys were on, and I wasn't looking for both gold or silver to participate until the dollar peaked. And I'll admit that the dollar strength was much more than I was looking for, but that was my rationale. Also, I didn't think that it would bottom until yields peaked. And then what happened is, you know, it's like sands, the last few grains of sand, maybe the last interest rate hike by Powell, and liquidation across equity asset classes, and people having to sell everything to meet margin calls. Plus, what was important to me for the setup was that every long was gone. Okay, therefore my Twitter handle, Forex Stop Hunter. And right now, this has the look of a classic stop hunt. The lows were 21.43. So, you know, there was at least, you know, one stop here after this first rally, and maybe the second long. I'm sure there were hundreds of stops under these lows. And so the longs aren't there anymore. We took them out, but if you probably felt good for, a day that, okay, I'm out, I limited my loss, my stop was in the right place, but that's 2140. And right now we're trading at 2184, about 40 cents above everyone who was liquidated out. This 2180 to 22 level, you could go all the way back and see what an important level it is, and pivot point. And if you thought it was a breakdown with that last week's candle, the breakdown is on the verge of being negated on the weekly. So that false breakdowns are, negated breakout or breakdown are really some of the best trades, because you have no one the right way because they've been liquidated out, and you still have shorts or longs to squeeze, and you don't have a lot of company. And so you have the whole market wrong footed. And, I think that sentiment did come down into the 30s or mid 20s for silver last week. So it's very possible that this was it at 2040. I know guys that are talking 18 and they want to buy it against the moving average, and there's a wave count that takes it down to 18. And I've been around long enough to know that anything and everything can happen. But I almost take it as a bullish event, because they weren't saying it up here. They're saying it now. And that tells me I don't have a lot of company. And what I've learned is normally when everyone's waiting for one price, and you know how I know it because I've done it myself, that it either doesn't get to that price, that it doesn't accommodate people to get long at 20, or here's the 61.8 they're looking at 1864, that and then if it gets there, it cuts through it like a hot knife in butter. So when everyone's in agreement on an area and everyone thinks they can buy something cheaper and they're ignoring this action, I think they may miss it. Now, when a market does this, I didn't go all in. Okay, I layered in, and my first buys were in the shares, and silver and gold shares, and not the metal itself. In fact, that's the way I'm going to play it, because I think there's there's going to be a time when risk on does come back and the metals are in gear, and that the shares will outperform the bullion. They should begin to outperform the bullion. So that's the pure case for silver. I think that if we start closing up here, the next major level is going to be the 23.5 to 24 level. In fact, this is how I came up with a 21 count, was this range 24, 27, right? Gave you 21. And so this is going to be an important resistance level up here to close above, to attack it. Maybe they attack it by July. The big test will probably come with the Fed next week. Also, this was important to me. And, guys, I interview a lot of smart people, and I always give them credit for, calling out a scenario or a number. And this is what set the whole thing up for me, was I kept thinking that we were going to break out in the gold silver ratio. And we finally had it, and that was a squeeze, and the pressure in silver that took silver to new lows without the gold. Now this 83 level is very important. I think we peaked here, up here around 38%. I could be wrong, we could go 50, but I'll have confirmation that the gold silver ratio is reversing with closes back under 82, back under these previous highs. This too will look like a false breakout, and maybe we're set up to have another big run back to the downside. As you can tell, I'm showing a lot of, to me right now, showing a daily chart is a short-term chart for some of the things I'm looking at. So there's still some time in the month for us to finish with a reversal month to the downside. And, maybe on this run, we're going to take out 62 and we get that break down into the 50s or 40s. But you know what? I want to be long both because I don't have as much conviction about the gold silver ratio as I do about the move in precious metals. So I'm long gold and silver. Okay, so we could move to the gold, and gold did not give up as much. Analogous lows, silver 2143 was 1680 in the gold, right? So actually caught some of this downside because I was more bearish silver. But I started buying the gold last week. I think it was a pretty important area. I think the next important area for gold is going to be this breakdown, similar to the $24 area that we had in silver. So that's, around 1880, 1890. And for a while I was taking this to heart. It's about a $200 formation. And if you believe that it was a descending triangle, which I don't because we only had one hit here. So it's just my imagination drawing it. Just my imagination. Anyway, so that's going to be an important area for the gold. And then, once we clear this breakdown, 1940 looks like a breakout on the daily if we get back above 1940. And I think that that's what could take us up towards 2350 to 2500 in gold into the same time frame into the fall. So that's the analysis on the metals. The outside markets they're important. As I'm gonna talk about the dollar here, guys. Everyone, based on this rectangle formation, is a lot of people talking 115, right? Now it's because we broke out. Let's look long term. So let me move us out of the way. Here's the high that we had all the way back in 2016, 17. And here's the COVID high. And, I'm amazed sometimes when I just draw a straight line. I don't believe it till I see a market react to it. But if you go back to the daily or even 4-hour, it came right back to it to check it at 102.35. Okay. And so people are calling this a breakout, right? Just using this whole range and then adding it on top of this breakout. I'm saying we're on the verge of a false breakout. And just like this day held before the recent rally up towards 105. And I'll admit that during the week here, I thought there was maybe a shot for another push up for a third drive. Sometimes it only takes two, but you guys know I teach about 3 being the number of completion and look for certain RSI patterns, their reversal formations. But, if we start taking out 102.35, and a lot of people are saying, well, yeah, we could do that. And I go, well, then what about your breakout? Well, we could break down to 100 and then rally to 105. I go, but you're saying this is a breakout. So do you think the market, once it negates a breakout and pulls back to 100, that it's going to be the right thing to do? Maybe it is, but I look at it this way. You didn't buy the breakout. The market's not letting you here. This was a test of the breakout. That was a decent trade, but you're going to buy it under the breakout. Mr. Market's going to let you in because you weren't alert a week and a half ago, and not only let you in on the breakout price, but let you even buy it cheaper than the breakout, which is negating the breakout. So that's my view. This is going to be a very critical price area. The euro, I teach people simple stuff like 2-week reversals. And this is the first 2-week reversal that we're going to have in the euro. All you do is count back 2 candles and look at the close. So if you're using it on a weekly, we have to wait till tomorrow. But the 2-week reversal came in at 105.40. So we're on the verge of a 2-week reversal there in the euro. We're way above a 2-week reversal in cable. And Aussie, I thought that we might get one more low. Kind of looks like silver flushed everyone out, took, all the stops out under the 70 level. If we get a push under 68, I'm a buyer. Okay, if that does happen. I don't have as much confidence that it is going to happen. Mission accomplished. All the Aussie bulls were out, similar. So you see how there's a theme in markets lately, like the last few weeks' actions in a few of these different instruments. You had to get the people that were positioned early out of the trades. This is my belief. The market will shake out as many participants as possible before the move they're anticipating occurs. And here's the salt in the wound. Then most likely without them, because they're out. Okay. I'm stopped out. They go fetal, right? I got burned. The silver burned me. Like silver's a person. It's a market. Anyway, so the dollar peak, and this is another part of this whole equation for the bull case. Someone showed me a chart, and I know you guys are market historians, Julian Brigden, and he showed me a chart, and he showed the major turns in silver, like at 50, the dollar was making a major low. Okay. And at major lows, the dollar was making a major top. Silver more sensitive to the dollar than gold is basically, we need a weak dollar for silver to work for big moves. So that's part of the equation. Now, what else could be a headwind or a tailwind? Well, I believe that interest rates, even though the Fed's going to keep tightening, have peaked. And I'm on record for it. It was up here, we're up at 320. I know we're getting a little pop here today. But to me, it looks like we could be forming a head and shoulders top on the 10-year yield here. And back under, this 270 level, 272. You could see, 220, 230. And, that's not even much of a correction when you look at where it started, and you really have to go really all the way back to a monthly. So I don't know, maybe this is the peak. I mean, this has been one heck of a move. Here we are putting in a reversal week. So maybe there's, higher rates coming, but I wouldn't be surprised with what's happening with risk. Bonds turn first before risk, and we're in this like capitulation phase. Who knows, S&Ps go to 3,400, 3,100. That yields could pull back to, 180. This was a big breakout area. And if you did some fibs, I bet it's important. So gold and silver acting well on their own, held up great, like you said, Kevin, during risk off. A lot of people thought they'd really pummel the silver, and it held up well. And, the dollar didn't do much during this to the upside in this recent sell-off. And I'd say probably the most important currency for a gold move to really get going is going to be the yen, because it's about yields. Okay, so you could say, I know some people talking 150 in the yen, but right here, it looks like it's going to be a top, but look how much weaker the dollar looks than the yen. Almost a reversal month. You do have a reversal week. And again, the 2-week off number. And these off numbers, guys, I don't know, you could just, for kicks, come in 1 week with them. there's a lot of trades that happen against these. You could use it for sometimes targets or an entry for a short or a long, but we're on the verge of a 2-week reversal in the dollar, 103.65. So we're 85 pips underneath that close. By Friday, you have your first 2-week reversal in quite some time, threatening to negate the breakout at 102.35. I rest my case.
Dale, I've been buying gold stocks while you were talking to us. That's what I've been doing.
It's interesting,
Okay.
isn't it?
I want me to share a couple that I like. You can't do everything, right? And I'm a big believer in, like, I follow your work, and you've been in the business for a long time. You get to know people, but I have a friend from St. Louis. He was a mining analyst for a long time, and he gave me this one for gold. I forgot who the jockey is running it. It's B2 Gold Corp, BTG. And this has a nice little look to it. They have no debt, and you get a 4% yield, I think, for sitting with it right here, which isn't bad. I mean, if 4% yield in this environment while you're waiting. Also likes Yamana. And Yamana, I think in this gold stage that we're going to see some takeover action, but not because the miners are desperate, just because they're going to get gobbled up by the big guys, because it's not a lot of money compared to what you have to gobble up when you try and buy Twitter, like Elon, the canary in the coal mine. And then the silver, I like this one, Endeavor. It's not setting the world on fire yet, but it had good earnings this day, so I used it. Silver hadn't bottomed yet, but when silver made the new low, it held. If they took it down again, there'd be no confirmed lows here. I'd buy more, but I know, guys, I think we could trade $10 in both of these, and this and this. So couple of my picks. And Yamana also is a buyout candidate. That's what I was going to get to. They're for sale.
There's one thing I noticed when you were showing us the DXY chart and the yield chart, Dale. As the DXY has went back to its previous swing highs, and the yields have went back to the 2018 highs.
Yeah.
Gold has not went to its 2018 lows. And that is huge. I call that the fuel reservoir. So now all these things that are supposedly anti-gold have reset. But now when they unwind down, I believe gold's just going to rocket from where it is now upwards.
Well, I completely agree. The inherent relative strength of gold has been phenomenal over the last couple of years.
And I think there's a reason for that. And I think it's to do with the effects of inflation and the US dollar index. If you were to chart the US dollar index against inflation, might sound a little bit of an odd thing to do, because the US dollar index is an index of currencies comparing the US dollar to principally the euro. But if you were to chart the US dollar index against inflation, what you find is that when the US dollar cannot increase its relative strength against those other currencies by more than the rate of inflation, then gold moves in an upwards direction. So it's very interesting when you do plot that chart, because when it breaks down, that's DXY adjusted for inflation. When it breaks down, that sort of marks the start of a bull market for gold very clearly, and it broke down a little while back.
You had another indicator, Kevin. I saw a tweet about some reading that has never been this high, never has lasted 3 years, and I think it had to do with the stock
RSI. I think if you put DXY on the, I think it's the monthly candle chart, and plot the stock RSI, it's never been at, effectively it's been at 100 on the stock RSI for week after week, month after month, and going all the way back to 1971, it hadn't maintained the stock RSI at that level for as long. So historically speaking, and by many other metrics as well, DXY is sort of on borrowed time, and I agree with you. It does look like what some people call an overthrow top or a false breakout.
Yeah.
It looks very vulnerable at this point, I think.
Yeah, I have a question for you. What like the Nasdaq is bouncing on its 3-year moving average. What do you? What's your take on U.S. equities at this stage? Like,
Yeah,
what's going to happen next?
Okay. Well, you know, I still think there's a short squeeze coming. This is what I thought was going to happen after the rally last week. I thought that we would hold a fib, and we didn't. But this 4,100 level, it turned it right back down. And the 4,100, you probably would have no idea where this line comes. It's not an uptrend line. It's a formation that everyone forgot about. Any guesses what it might be? That line?
Could be a number of things. It could be a Fibonacci retracement or extension, but 4,100, if it's not historic trend line, not sure what happened to that.
All right. I know you guys are a lot younger than me, but in the old days, before microphones, what did people sing out of? Rudy Valley. Anyway, what we're looking at here is what everyone was talking about that got killed trying to trade it for a couple years. The megaphone.
Megaphone pattern.
That looks pretty ominous, doesn't it?
Yeah. That's and that is, you know, very much a false breakout. You know, there's a megaphone pattern in there, overthrow top, and now it's
a lot of that going on here.
Yeah.
Anyway, so yeah, there could be, you know, there could be a bounce, but I mean, 3,400. A lot of people saying, you know, this would be a natural place for it to stop. I don't know if gold's going to like it, or, you know, maybe the weak dollar is what people, you know, they're not going to talk about it now because reporters will talk about it after it's fact, but maybe the fact that we've been called the cleanest dirty shirt in the neighborhood when you see things like Walmart and Target and the FANGs gapping down and losing 25% of their value in a day, that the market is broken. Instead of eroding into this, you know, I bet there are a lot of people, and they've talked about it for years, that wish there were specialists to make a nickel on a contract to come in with some bids when there's an earnings report like this, so that the machines can't just take it down in a second. So, you know, we have people have been talking about market structure for a long time, and this is not the way, you know, market should give up 20%, maybe in, you know, on a vicious move in a couple of months, in a day. All over the place, you find these huge gap lower openings everywhere. I made a joke the other day, I think it was Walmart. And I said, Blake, do you think we should buy it to fill the gap? All right, you know, I mean, the gap, everyone thinks every gap's going to get filled. Anyway, but I'm negative. I'd like to see a rally to shake out some shorts, but you know, you can't say anything bullish about this.
The thing with gaps is it probably will get filled, but it could be 2, 3, 5, 10 years from now, you know, so
and a huge move against you. I think we're going to, even if we do get a short squeeze, and if we got back over this week's highs in some measure, there could be a short squeeze in front of the Fed that could take it to 42, you know, 43. But I'm sure having a hard time buying the melt up idea here anymore. I was for a while. Well, maybe we will, but I'm having a hard time. And just about the dollar, maybe the dollar's going to drop because we're not the cleanest dirty shirt anymore. Maybe it is elsewhere. Maybe it is Great Britain. Maybe it is Australia with a China reopening. Maybe the way our markets are working right now, you know, people want to look at things priced in other things besides dollars.
Dale, this is why, even if there's a melt up in US equities, I'm trying to not educate, but tell people stop looking at nominal values. Measure the NASDAQ or the SPX in gold. It hasn't, they're not even higher than 2001 highs. And even if there is a melt up and we get a short squeeze in US equities, when you divide that by gold, measuring gold, it's not going to be going up as high as you think it's actually going. It's still rolling over that famous SPX to gold ratio there. So
exactly, and
Also-
people need to remember that we've got nearly 10% inflation across most of the continent of Europe at the moment. It's at 9% here in the UK. So if you're talking about medium to longer term investments with that kind of rate of inflation, why measure everything in a paper currency that is going down the toilet along with all the paper currencies? All they're doing from year to year is passing the baton from one paper currency to another, and they're fluctuating up and down whilst the whole lot gets washed down the drain. Gold, on the other hand, for the last 20 years, since 2000, has been on an upwards trajectory, and people just, if we can educate people a little bit to price things in gold is the constant. Gold sits there. It just acts as a barometer. It measures the destruction of paper purchasing power. So yeah, I totally agree with what Pat said there. Measuring stuff in gold is the way to find out how your investment is doing, because that is taking into account inflation. Gold is rising at the rate of inflation, or in other words, gold is reflecting the rate at which paper currencies are devaluing. And just getting that into people's minds, it's a really, really tough job to do that, because everyone's so
well, yeah, and you're not hearing much about the Bitcoin gold debate anymore, about which is better, and that'll continue most likely. I don't know, but
what's your view on the cryptocurrencies, Dale?
They trade with risk. They've been institutionalized, so I don't know what they are. I don't think it's a great looking chart. It's not terrible. I really don't know what to do with it. Maybe 20,000. I see this and I have a 2 drive to a top. Sometimes that's all you need, and it could keep melting, but it almost looks incomplete. Like we should have one more shot. And you were talking about if we get a melt up, Patrick. Gold and silver positions would welcome a melt up, because gold's not going to sell off because everyone's in love with semiconductors again. It's going to give jet fuel to the miners. Yes. Jet fuel.
Yeah, I agree. Silver loves a rising market. It's going to rise faster to price in that monetary imbalance, right? In the first leg of a bull market, even in US equities as they rise up, silver rockets out of the gates, even gold rockets out of the gates. So we'll,
like you asked me, what do I do with equities right here? I mean, it looks ugly, but I have more conviction about what I've talked to you about today. I knew guys that never left the cattle pit. It only takes one. And I don't have to know where everything's going. I just have to know where my higher probability trades are. And when the evidence mounts with confluence coming from all different directions, it gives me the confidence and conviction with risk management. I know where I'm going. Okay, so you don't have to know about every market. Take the pressure off. It's okay to say IDK. I don't know. So, I don't know what to do with S&Ps right now, but I certainly was prepared for this precious metal bottom. I had 5 months to think about it.
Man, such wisdom, Del. I wish more people would go on the TradeGate Hub and all the other stuff you do there, because education, teaching people how to fish and stopping just following trade picks. I know people don't have time, but you gotta learn all this stuff, guys, because your emotions, if there's a drawdown and you don't have conviction in your trade framework, you're just gonna sabotage yourself.
Yeah, it's all in our heads.
Yeah, it is. So it's so easy, Dale. I should be a billionaire today. What's wrong with me?
And another little trick, that I often sort of, just to tune out the noise, is just actually fade the price chart off your TradingView chart there, and just focus on the moving averages. Stick on a 12-month and a 36-month moving average, or whichever.
Yeah, filters out the noise.
And just filter out the noise. Just follow the moving average, buy the the bullish crossovers and sell the bearish crossovers. You can make it as simple as you really want to with trading. If you've got a longer time frame, then you can actually make it very straightforward.
You know what really makes it simple? And I'm speaking from, gosh, should I say 40 years experience now, is not trying to hit home run balls and not over leveraging and having enough on so it matters, but so it's not life or death.
Yeah, some very wise words there from you, Dale.
Okay, because I don't worry about what I have on the books when I shut down my platform or go to sleep. I know I could come in, down, up, whatever, but it's not like it's so critical. The more critical it becomes, the more emotional I would become. So that old expression, own your sleep level and not more.
Yeah. Hallelujah to that. I think if you can't sleep at night, then you're doing something wrong with your
But
trade.
I did swing at the fences a few times, hit a couple, and home run hitters are also leaders in strikeouts if you're a baseball fan. And
Great analogy.
And it hurts to strike out in this stuff because you have to go out and put together capital again.
Yeah, Nate Silver wrote a great book. A lot of it's based on baseball, actually, The Signal and the Noise, where he talks about all this kind of stuff.
Yeah,
definitely recommend that book for anyone that hasn't read it. But I'm not a baseball fan myself, but I'm learning fast.
You don't like baseball, Kevin? We're going to lose our whole American audience. You can't say that on the podcast.
I'm a football fan, Pat. You'll have to.
You mean the European football?
Soccer.
Or American
What you guys call it?
Yeah, soccer, you mean?
Oh, hey, okay. You can't call it soccer. That's an American.
All right. Anyway, guys, I had a blast.
Thanks, Dale. Guys, follow Forex Stop Hunter, TradeGate Hub, and Dale, man. Anytime you want to talk, beep us up there. We're gonna hook you up.
Silver 2022, guys. That's my mantra.
Show those biceps.
All right, guys.
Okay.
Thank you very much. Respect and root for both of you guys and everyone that your words touch. Okay.
Thank you, Dale.
Thanks, Dale.
Bye-bye.
Adios.